we have the big aluminum companies in the United States, and they've been very unfairly treated by bad policy, by bad trade deals. So we're going to build our steel industry back, and we're going to build our aluminum industry back.
These tariffs have not been good. They definitely have caused an impact where we are at a competitive disadvantage to foreign manufacturers of equipment.
If you talked to farmers a few weeks ago, they would have said, we are behind the president, we are behind these policies, we understand the Section 301 challenges that our country needs to stand up for. And that's very different today because there's a huge hole. I mean, if somebody were to lose 20% of their income, that hurts. I don't care what segment of industry you're in, that hurts, and farmers are feeling that right now.
We saw an immediate impact. You know, we buy some of our rail from Japan. It's got chemical structure and length that we don't get in the U.S. We actually pay a premium for that rail. And the first boat post the 25% steel tariffs cost us $6 million more.
Metal right now between stainless steel and aluminized metal has increased significantly. The 25% tariff that come into play really has upped our cost of manufacturing about 39%. It's extremely difficult for us to make sure that we remain competitive with the products that are coming in from overseas as a finished goods, and in those cases there is no tariff on those. If we were to put in the price increase that we needed, the end user would end up paying anywhere between $800 and $1,000 more for the product just due to the tariffs.
The tariff issue is not good for anybody, and we are feeling a bit of that already. We try to swat that away, but you can imagine the number of things in our stores that have steel, and that is impacting cost of goods. I would say we're in the neighborhood of 10 to 15% of our business is being impacted by that.
The whopping price decline really has been in chickpeas. We've seen almost a 50% decline. If you don't have those markets to go into, or the markets are uncertain about what's going to happen in the future, they tend to look for alternative suppliers just to hedge their bets to make sure that they can cover their needs.
Our exports to China each year are pretty close to 10 million hides raw, and probably another 4 in wet blue, which is a semi-processed state. So the 25% tariff on these, returning the goods back to the United States, because in large part that's where they come, would certainly slow the trade.
So we would in effect be putting a tariff on an American-originated product?
Correct. There is no furniture, leather, tanning, or finishing in the United States anymore.
It left, it went offshore.
It's gone. It's been gone for almost 20 years. That's why when we got swept up in this mess, we were like, this must be the administration's scorch the earth policy with China, because there's really no real good reason.
Would a 25% tariff effectively put you out of business?
I don't want to say something like that, but
it would damage you.
Undeniably, there is lurking serious ramifications.
The $200 billion round really contains about 80% of our goods. The announcement up to 267 more really covers 100% of what we sell. And being a small to mid-sized business, you talk about disproportionately harming our business. Shoot, this really does it. And this trickles down to the consumer, to you. And when you're buying a good that's $100 today, you're going to be paying $125 tomorrow. So that 25% tariff really just passes down to the consumer as a tax at the end of the day. Our biggest fear, frankly, is that the larger businesses that play in our space can absorb some of that 25%. But being a small to mid-sized business, we really don't have that option.
We've seen a price increase first on steel that's used in our distinctive metal containers. It's going to cost us into the 6 figures this year in extra costs, because the amount of domestic supply is not enough to meet all of the U.S. demand. So when those tariffs went into effect, they put pressure on other people who may be sourcing internationally. Now they all want that U.S. supply. Silicone, that took effect a few weeks ago. There was a market that was already chaotic due to global supply shortages, due to the economic success worldwide. It's not going to help.
So what are you doing in response?
Well, one of the things we did was we looked at the chaos and we said we need to stock up. We need to buy material now at a known price instead of waiting for our normal supply chain purchasing times where that price could increase later in the future.
Everybody's concerned about the impact of a significant rise in cost to the end consumer. And certainly the first 2 rounds of tariffs were minimal impact to the consumer, but the one that goes into effect on Monday will have a significant impact, and there's concern that it will dampen consumer demand for the products.
Prices are probably going to be going up from our supplier by about 5%, and that equates to probably about a couple pennies per can, but when we're ordering a truckload of about 200,000 cans, that counts as an extra several $1,000s to the shipment. And that's an expense that we really can't pass on anywhere. We have to eat the entire cost because we're trying to maintain a competitive price point in the wholesale market for our product. We're a very small business here. We're producing probably between 1,000 and 1,500 barrels of beer a year right now, which sounds big, but when you talk to somebody like Anheuser-Busch, Miller Coors, the big guys that are producing hundreds of thousands, if not millions of barrels of beer, we just can't meet those economies of scale.
We're a big multinational company doing business in many markets against other multinational competitors and local competitors, and free trade ensures a fair playing field and a competitive playing field, so it's something that we support. Having said that, just because of the economics in our industry, we produce most of the products that we sell in the markets in which they're sold. So tariffs, while hitting us, are not a significant factor. They won't hold up our overall progress.
China's been taking out of our country $500 billion a year, and it was time to stop. And we're going to have a great relationship with China, but we have to be fair to ourselves.